My name is Blair Goetz. I've been a certified management accountant in Canada for over 30 years. I've been preparing tax returns for over 25 years, and many of those have been related to Canadian-American cross-border taxation issues. You can contact me at Am or email me at blair.goetz@gmail.com. First of all, I'd like to do a disclaimer. I didn't make the rules. I don't necessarily agree with the rules. And my job is to inform you and pre-warn you. And I'll be discussing concepts in a general way, which may or may not be applicable to your situation. You are advised to seek professional advice before taking any. During this presentation, we'll be talking specifically about the U.S. taxation of citizens living in Canada. Now, for U.S. citizens who have a U.S. passport, the last page of that U.S. passport reads, "All U.S. citizens working and residing abroad are required to file and report on their worldwide income." Therefore, all U.S. citizens are required to file and report their worldwide income regardless of where they live. U.S. citizens and residents must file the U.S. tax returns on worldwide income by April 15th of each year. The extensions are available but must be applied for. You must report any and all foreign bank accounts. You must also report your Canadian registered retirement savings plans. You must report any corporation which you hold 5% or more share ownership. You may have a U.S. taxation liability if you sold your family residence. There is also estate tax, as well as if you have Canadian dividends, which are subject to the dividend tax credit in Canada. Those dividends may be fully taxable in the United States. And not related to income tax, but another tax that you need to be aware of if you are renting property in Arizona and Hawaii is a rent. Now, there are certain exclusions and credits which are available to avoid double taxation. If you're a U.S. citizen working in Canada, you have available to you what's called the Foreign Earned Income Credit or exclusion. And this exclusion allows you to earn a wage, your salary, or other earned income up to $91,500, which is exempt, excluded from your taxable income on your U.S. tax return. Also, if your employer provides subsidy or housing costs, there's also what's called a foreign housing exclusion. And also there are foreign tax credits which are available to prevent double taxation. So oftentimes, by filing a U.S. tax return, there is no additional income tax liability. Most often that is the case. The question I get asked most often when making this kind of presentation is, how will I ever get caught? If you're a U.S. citizen living in Canada, how will I ever get caught? If I'm a Canadian with rental income, being paid in cash or whatever, how will I ever get caught? Well, many ways, some of which I don't even know about, but some of the ways that are most common is that, first of all, 10% of U.S. Border Patrol have access to the IRS computer files. So when you go as an American going across the border, you give them your U.S. passport, they scan it, and then they can also access your IRS files to determine if you have, first of all, filed your U.S. income tax return, if you have outstanding penalties related to that income tax return, as well as outstanding tax. And in rare cases, there has been situations where this has been the case, and they have the ability and authority to seize any property at that time, i.e. your vehicle, to satisfy those outstanding claims, depending on the situation. Also, if you're a snowbird, the U.S. Border Patrol knows how many days you spend in the U.S., and the reason they keep track of this is to determine whether you have a substantial presence in the U.S. And the new technology and reporting requirements by the financial institutions provide the IRS with any transaction related to you. And so also with new technology, and not on the slide, with new technology and intergovernmental cooperation between the Internal Revenue Services and Canada Revenue Agency, they are cooperating fully together to identify individuals that may have tax liabilities in each other's countries. And probably the other most common form of method of identifying a person who's not met, a U.S. citizen who's not met their tax liabilities, is through the passport renewal process. And so these are just some of the ways that you may be identified and caught if you have not been filing the proper return. The Internal Revenue Services penalties are automatic and severe, with no discretion if they are IRS initiated. They include a $10,000 per account per year for a financial account not reported, up to $500,000 and 5 years in jail. For unreported income, the penalties are $25,000 minimum. So if you have unreported rental income or other types of U.S. income, the minimum penalty is $25,000. In addition, you cannot claim exclusions and credits, which oftentimes result in double taxation. And just because you're in Canada doesn't mean you're out of the reach of collection by the Internal Revenue Service, because Canada Revenue Agency can collect on behalf of the IRS because of the tax. So what should you do? Well, if you come forward and file for 6 years, the financial reporting, foreign account reporting penalties will not be applied. If tax is due, interest will apply, but penalties may or may not, depending on the situation. So there you have it in a brief nutshell. I'm here to help you. Am Taxation Services. My website is canamtaxationservices.com. I invite you to visit it, or you can email me at blair.goetz@gmail.com or call me at 403-328-8814.